Joining me now is Gerhard Schubert. He's the head of commodities for Emirates NDB. Gerry, thank you for being with us on Kitco News.
Thank you very much for having me. It's my pleasure.
So Gerry, I know in your last commentary you weren't too bullish on gold. You were saying that basically it's in no man's land. I guess my question to you is, do you think we'll see fresh buying anytime soon?
I mean, first let me put in perspective the comment of no man's land. If you are long, there's no reason to sell it. If you're not long, there's not a lot of reason to buy it currently until it breaks 1425 on the upside. That's a technical point. And that would clear the way to 1525. That was the breakout point where gold collapsed in April from 1525, where we saw the massive sell-off.
So you still think it's playing this tug of war right now, doesn't know which direction it should move in?
I think the physical markets have basically also saved gold in April, May, and in June. Physical markets have waned off a little bit recently, but I think the physical market have been very strong and very steady, and especially a lot of flow from the west to the east, especially to China, has helped for gold to stabilize. And we do think that gold will have another go towards 1500, 1525 before the end of the year.
But let's look at the crisis in the U.S. right now. We have the debt ceiling approaching. How might that play a role with gold?
I mean, obviously, you see since Friday, gold basically moved from 1325 to 1338, 1342 today in the morning, earlier. But, that's still neither here nor there. I do believe that the political parties in the U.S. will ultimately agree. The government shutdown, wouldn't be for the first time,
right.
And it is not an absolutely awful event. It's not good, and it's not good for investment confidence, but it shouldn't damage. The debt ceiling issue is a much stronger issue, and that's middle of October.
So, Gerry, you mentioned, yes, it's not the first time that we would see a government shutdown, but how did gold perform in the past during these shutdowns, and could that be repeated?
I think the initial reaction is that gold goes up, as it's been looked at a safe haven, rightly or wrongly. But I think it will definitely not be negative for gold. But the positive event, I think everybody still believes that this game of brinkmanship, we've seen it when before the downgrade of the US. These games of brinkmanship, they appear to become too regular and too often. At every important event, it's going to the last minute, to the wire. And I don't really think that, there's a need for it, and ultimately they will agree anyway. Just political brinkmanship.
So if we look at a longer-term forecast, 6 months to a year, are you bullish for gold, or do you think it will stay in this no man's land?
I don't think it will stay in this no man's land. I'm still positive because I think there are other issues which will come much more to the forefront. The European sovereign debt issue, everybody accepts now that Europe comes out of the recession, but it's only a few countries out of the Eurozone which comes out of recession. Overall, the issues, the unemployment figures are still dramatic, and I think also after the election in Germany, I expect the tone within the Eurozone to become a little bit tougher. There are geopolitical tensions which are, you can't forecast them because they happen as they happen. And I do believe that the tapering of the quantitative easing ultimately, or will come sooner than later. It doesn't really matter when it comes, but it will come.
Okay, despite what Bernanke said.
Yeah, but it will come. If it comes in October or if it comes in December, it's pretty relevant.
Okay.
But there will be tapering, and I think the market expects it. Okay. The balance sheet of the Fed will be around 4.1 trillion at the end of this year. So if we look towards the middle of the year, what Bernanke said in June about potential ending it, by that time the balance sheet of the Fed will be around 4.4 trillion. What is a significant balance sheet, which also the Fed then has to think about reducing it to normal level. This would take some time.
All right, Gerry, before I let you go, we're obviously in Rome here at the LBMA. What do you think the sentiment was like? Because I feel being in this hotel, you really leave wondering, what recession?
It is in the nature of the beast that the conference participants are much more, or appear to be more friendly toward the prices. But make no mistake, ultimately, the current environment is still favorable for gold. The physical aspect is really very strong. But rising US interest, and I'm not talking 2013, maybe 14 or maybe 2015, rising US interest rate will be negative for gold. That's absolutely clear. In a 3-4% US dollar real interest environment, it's very difficult for gold, who has nothing other than price participation, to compete with investment money.
All right, we'll be on the lookout for that, Jerry. Thank you so much for your thoughts today.
Thank you very much for having me.
And thank you for watching our continuous coverage from the LBMA here in Rome. You can email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Cambone. We'll have more for you. Thanks for watching.